just a direct impact of 10,000 students, which is where they started initially. Now, by again working in a systemic way, a catalytic way, they impact 1.3 million students. So these are just three examples of large companies that have achieved scale of 1 to 4 million in terms of impact in the areas that they work in, which is skill, education, and livelihoods.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Walmart-owned PhonePe files draft papers to go public through the confidential route, plans to raise 12,000 crore rupees according to sources. Existing investors Walmart, Tiger Global and Microsoft likely to sell about 10% equity.
Swiggy exits Rapido by selling its 12% stake to Prosus and Westbridge Capital for nearly 2,400 crore rupees. Swiggy will also transfer Instamart to a wholly owned subsidiary in a slump sale to open up fresh options to raise funds.
Oolka, an agentic AI credit management platform, has raised $7 million in seed funding. Round was led by Lightspeed India and Z47 with participation from 8i Ventures and angel investors. Oolka claims to have already processed over 100 crores in credit repayments and is on track to cross $1 million in ARR.
Gulak, a goal savings app, has raised $7.5 million in a Series A funding round led by Chirate Ventures and others. Funds will be utilized for brand building, expansion into Tier 2, Tier 3 markets, and deep jeweler partnerships to co-create innovative solutions.
After agreeing to a $100 billion investment from chipmaker NVIDIA, OpenAI has inked deals with two other tech giants to build 5 new data centers across the United States. It would work with SoftBank and Oracle to build computing facilities. OpenAI said that it now had agreements in place to build more than $400 billion in data center infrastructure.
Those were the headlines that we're tracking for you from the startup world. But let's go across to the big story that we're tracking today. Walmart-backed PhonePe has set its eyes on going public. The payment aggregator has told CNBC TV18 that they have filed IPO papers via the confidential route with SEBI, BSE and NSE. Ritu Singh joins us now with more details. Ritu, what are your sources telling you?
Well, Walmart-backed PhonePe has filed draft papers with SEBI for a mega IPO through the confidential pre-filing route. Now, the IPO, of course, has been in the works ever since PhonePe shifted its base from Singapore to India back in December of 2022. It later confirmed its IPO plans in February of this year, and now sources are telling us the company is looking to raise nearly 12,000 crore rupees, that's $1.35 billion, through an offer for sale in this IPO. Now, Walmart, which owns about 84% stake in the company, along with Tiger Global and Microsoft, are the 3 shareholders that will participate in the OFS, which will involve a combined dilution of around 10% stake. Now, PhonePe launched its digital payment app in 2016, and since then it has expanded into financial services and even consumer tech. It recently received RBI's final nod to operate as an online payment aggregator and remains a clear market leader in UPI payments. But on the numbers front, while losses are narrowing, PhonePe is not profitable yet. For FY25, revenues jumped more than 40% to about 7,100 crore rupees, while net losses came down by 13% to about 1,727 crore rupees. But this is shaping up to be one of the most closely watched listings in India's fintech space, simply because of the company's sheer scale. PhonePe was, remember, last valued at around $12 billion in the private funding round, and reports suggest it could now be eyeing a $15 billion valuation when it hits the public markets.
Well, thank you, Ritu, for those details. Moving on, and also on what's brewing, UK-based business management platform Tide has secured $120 million in a strategic investment led by TPG, valuing the company at $1.5 billion. Now, the fresh capital will fuel Tide's international expansion, accelerate product innovation, and deepen its push into agentic AI. India has emerged as Tide's fastest-growing market, with over 800,000 SMEs onboarded in just 2.5 years. To talk to us about Tide's next phase of growth and its global ambitions, joining me now is its CEO, Oliver Prill. Oliver, welcome to Startup Street. Tide has secured $120 million from TPG, like I mentioned, at a valuation of $1.5 billion. Tell us, what does this fresh capital mean for you at this stage of growth? TPG has invested through the RISE funds, which focuses on impact. So how does Tide's model and mission align with the thesis on financial inclusion?
Absolutely. So Tide is, as you say, the leading business management platform, and we really focus on small entrepreneurs and enabling them on their finance and admin. And I think the RISE Fund was particularly attracted that is really helping financial inclusion and, building economic prosperity. And you mentioned India, and India is now not only our fastest growing, but in terms of members, actually our largest market.
All right, Oliver, picking up from what you just said, India has become Tide's fastest growing, largest market with more than 800,000 SMEs onboarded in just 2.5 years. What's driving this adoption, Oliver, and how critical is India to Tide's global strategy? Also, what does the next phase of Tide's India journey look like? Are we going to see newer products tailored for this market?
Yeah, so I think that the key thing is we actually estimate that India has 130 million MSMEs. So there's a large part in the informal sector. And what Tide really supports is the formalization of this. And, the UPI, the GST, ADM, and various other things that, the Indian government is doing is leading to this enormous adoption of, formalized financial services by micro SMEs. And Tide is benefiting from that and in many ways facilitating that and hopefully making its contribution to the Indian economy.
So, Oliver, if you could elaborate on the newer products that you're tailoring for the Indian market especially.
Yeah, so, we have a current account and a card, and you can already do invoicing, bill pay. And so we're going to massively expand that into acquiring. So we already allow merchants to accept UPI payments. We're going to introduce POS devices, savings. We already are one of the larger credit intermediaries in the UK. We have launched that proposition in India. And so credit is very high on the agenda as well in terms of our rollout in India.
Okay. Now, beyond India and the UK, Tide has entered Germany and most recently France. What are the learnings from your mature markets that you're taking into these newer markets? And Oliver, what kind of impact are you hoping to create in these new markets?
So the key learning for us is to work off one global tech platform. So you mentioned this earlier, and you said about the other tech players. We are really working off the same platform, and so the functionality we have in the UK, we can rapidly deploy in other markets. We're working through adapters, so with minimum adaptation. So that's how we've been very able to very quickly roll things out in India, and that's where we are rolling out things fastly and quickly in France and Germany. The lesson learned from India is really, and to extend France and Germany, is that SMEs everywhere have the same problem. They're really underserved by the banks. The owner managers really want to get on with running their business, and so they need minimum involvement in finance and admin. And that's what we are here to do, right? We're really there to help them with their finance and admin so their businesses can thrive.
Sure. Oliver, Tide's mission has been to save SMEs time and money by solving business management tasks end to end. So take us through your tech edge. What kind of efficiencies are we talking about? And what's next on the product roadmap?
Yeah, exactly. So small businesses really have jobs to be done, right? And so think about it. I write an invoice as a small SME. I then want to factor the invoice. I need to control the current account to see whether the money was paid, or that we need to automatically chase it. Put all of that into your accounting system. So that's what Tide does, right? It makes everything work seamlessly together, and therefore saves time. And so we think the time saving, is something like 2/3 of the time that it would take to do this manually. So there's an enormous time-saving element that then business owners, and that's typically what our customers are, can actually use to actually go and help build out their business, as opposed to spending it on useless finance and admin.
All right. But what's next on the roadmap then?
Yeah, so I can't give you the exact products, right? But you had mentioned what we're doing at pace is actually AI adoption. So a lot of the platform is already uses AI in one form or another. We're going to massively scale that up. We have a number of products that we want to launch. I can't talk about them now, but they will be accelerated through this investment. And also, thirdly, the big growth factors, internationalization. So our India business, as you reported, is growing very, very rapidly, and we want to give it all the resources we can possibly give it to make sure it continues to thrive the way we've seen it thrive over the last 2.5 years.
All right. Oliver, you spoke about accelerating growth at Tide, and you are going to accelerate Tide's investment in agentic AI. How do you see AI transforming SME-focused fintech, and what edge does Tide have here?
So the key thing, I think agentic AI, right, in many ways will make things even faster and more easy to use, right? So I don't think it fundamentally changes our strategy. We are, in the end, in finance and admin, this is not something that can be disintermediated very quickly. Quite the opposite. I think with agentic AI and this enormous pool of data that we have, we can actually accelerate the adoption of our platform. Simply put, what LLMs are very good is understanding the public world, right? We have a very strong private world model with all the proprietary SME data we've got. So training generative AI models, or getting them to use proprietary data and using it in our advanced processes on finance and admin is actually an ideal combination. So we want to combine that for member impact.
All right. Tide already supports 1.6 million members worldwide. Oliver, what's the long-term ambition? If you could take us through the revenue growth targets, the revenue mix you envision, and how you see the business scaling over the next few years.
So we want to be in a whole number of markets and be recognized as the global #1 in business management platforms for the small SMEs, right, that we actually serve. And so this is a big milestone in that. You talked about the 1.6 million members we've got already, out of which 800 in India. We think by year.
All right. Oliver, on that note, it's time for me to wrap up our conversation. But many thanks for joining us on Startup Street today, and wish you the very best with all your aggressive growth plans.
Thank you for your time.
All right, moving on. Electronics company Indkal Technologies landed an investment worth $20 million from its existing investors. The startup aims to use this fresh capital to fuel growth of its brand Wobble displays. In addition, the company will deploy funds to strengthen Indkal's research and development, enhance its sales and service network. To discuss the company's growth plan and its vision for Wobble displays, we are joined by Anand Dubey, the CEO of Indkal Technologies. Anand, thank you so much for joining us on Startup Street today. It's great to have you back on the show. Before we get into the rest of the fundraise, what strategic advantages does this recent $20 million Series B bridge funding provide to Indkal Technologies and its brand Wobble displays?
No, my pleasure, and thank you for having me again. It's obvious. I mean, obviously, we are a product company. We rely on our capability to create better products which are tailored for the Indian market, and that's something that we've created a real emphasis in the past 5 years of our existence, and that's where I think fresh impetus is going to be put in. The new funding obviously allows us to strengthen our product development capability. Helps us take these amazing products that we're developing in display technology to different parts of the country, and then make sure that we're strengthening our after-sales service capabilities, which are obviously something that play a very large part in the trust that we are going to be able to build with our customers. And that's essentially what we're going to be using this new round of funding for.
Sure. And, how does Indkal Technologies plan to sort of utilize this fresh capital in, to innovate and expand its product portfolio? What's new on the anvil, especially, in the premium television and display segment?
It's going to be important to see how the market evolves, because the television market in India has been, in general, hasn't seen a lot of growth, which means obviously you're fighting for place in customers or consumers' homes with a lot of different brands. And what sets us apart is our emphasis on developing larger screen size televisions. That's something which we've been working on for a long time. We've introduced larger and larger screen sizes in the past. And then developed display technologies like QLED, and then even on top of that, now a mini LED television in a large screen size television. We think the market is shifting towards more premium products. Even if the volume growth hasn't been there, we've seen the average screen size in India rapidly grow. It's now in 40s, more than 40 inches. We expect it to get closer to 60 inches eventually. That's where a lot of more developed markets are. China market is close to 60 inches in terms of the average display size that we see in a television being consumed consistently. That's where we see the shift happening, and that's why the emphasis is on developing not only large screen size televisions, but also developing display technologies which create a better immersive experience for our customers.
Absolutely. So you are seeing the shift to a more premium segment. So in the light of this, how significant is the launch of the Maximus series with the 116.5-inch TV in the context of India's consumer electronics market and display technology innovation?
Sure. It's disruptive. It's disruptive because now the screen sizes which were unheard of in the past, 116.5, 98 inches, 86 inches, which are typically not consumed in the Indian market. Our effort will be to bring them closer and closer to more accessible price points without compromising on the technology that is available. A lot of it is now being enabled because there's such emphasis from the Indian government as well to try and push for the research and development to happen here. Component manufacturing ecosystem is developing very rapidly. So next 3 to 5 years, we see that very, very quick jump from where we were, which was a very EMS assembly-based infrastructure for product development and manufacturing, to a genuine hardcore research and development-based infrastructure, which will allow us to democratize some of these very large screen sizes, which we definitely want to consume, but have been sort of out of reach in the past few years.
Absolutely. So you're calling this a disruptive move. And if you could then take us through, the kind of revenues you're currently clocking, and where do you sort of hope to end this year? Also, what's the kind of impact that you hope to see from the GST rate rationalization?
Right. We closed last year at around 850 crores of revenue. This was our third full year of business. So we've consistently seen immense growth, and we've been fortunate that way. The GST reform is massive. It is closer to 8% on larger screen sizes. And this sort of reassures what we were talking about in the earlier conversation, which is a shift towards larger screen sizes. Anything above 32 inches was at 28%, which is now at 18%. So that massive drop in prices, along with what is happening on the product manufacturing infrastructure setup that we have, both for the finished goods and component level manufacturing, this will spur up the demand. And we've seen a lot of latency in the past 3 years in the television market where the volumes haven't increased much. That is probably attributed to the fact that the screen sizes were expensive and most households were still consuming only one television in general and max 2. I think that is going to change rapidly, and now we were going to see larger screen sizes being adopted because of the price drop, and the number of screens per household increase rapidly in the next 24 to 36 months, which will give even more motivation to companies like us to come in and try and develop better products, bigger products at better price points for the India market.
Sure. And, if you could quickly tell us in 30 seconds, what challenges does Indkal foresee in scaling up its premium product offerings and expanding its sales and service network across India?
I think the challenge will be, obviously, we're new to the market, and this is something we will have to demonstrate on how much progress we've made and how far we are in terms of our product development and quality infrastructure that we've built. We've seen our portfolio in televisions. We're among the top 5 players now in the country in terms of volume across all our brands. The hope is to obviously get into top 3, and then for that we will have to continuously demonstrate that not just the product but also the service infrastructure is developing rapidly, and customers even in deeper pockets of the country can look at Wobble as a viable option for their television consumption needs. I think it's a slow process. It's something that we obviously have to keep on reinforcing through high quality products and then great service. So more than challenge, I think we see it as an opportunity to continuously keep doing this over a longer period of time, something that we've done in the last 4 years. We have to keep on doing this over 1 decade for us to be able to get that position.
Also, this $20 million is part of a bridge round, right? So you're also looking to raise a further $80 million. Can you sort of elaborate on the fundraising plans and when you hope to close this larger round?
So I think it's still, because we're still closing the bridge round, we will start taking in the process. We will start the process of building the larger round. The hope is to finish it off by the end of this financial year. So March is when we're hoping to finish off the larger round. I think a lot of things depend upon what happens between now and towards the end of the year. Obviously, with the GST reform, there's a lot of optimism in terms of the growth of business. Obviously, we're also trying to reassess and try and see where we can get after this massive opportunity has been created. Financial year end looks like a good timeline for us to think about the larger round being completed.
So you're looking at the financial year end to see the larger round close. All right, Anand, thank you so much for joining us on the show today, and we wish you all the best on this journey going forward.
Thanks for having me.
Well, with that, it's time for us to head into a short break. But coming up, fintech startup Oolka adds $7 million to its kitty. How does it plan to use the funds? We find out on the other side.
Bengaluru-based fintech startup Oolka has raised $7 million in a seed round to scale what it calls India's first agentic AI credit management platform. The funding, led by Lightspeed India and Z47, with participation from 8i Ventures and other angel investors, will help the company scale engineering, data science and product teams while accelerating the rollout of advanced AI features. Founded in 2024, Oolka has already processed over 100 crores in repayments and onboarded nearly 2 million users. For more on this, joining me now is Utkrishta Kumar, the founder of Oolka. Utkrishta, thanks so much for joining us here. Start by telling us the